Hello, good morning, everyone. Welcome to all of you for today's session. Students, just let me know whether you people can hear me well. Can you hear me well? Tell me, please. Right. All right. So, students, in the last session, I gave you some homework to do a few readings from the study text. How many of you have gone through that? Yes, a few people have not yet arrived. Tell me, how many of you have gone through that notes, study text? Yes, please. No one. Okay, so we talked about the development of IAASB standards in the last class. Let me connect my iPad with it so that I can proceed in today's lecture. Yes, this is what we discussed in the last class. The last lecture is here. We started chapter 2, actually, and we talked about uh, national laws, RSB, IAASB pronouncements. We talked about these things in the last class. So today we will be proceeding further and we will be talking about that, yes, a few things more regarding the same. Students, whenever the company appoints the auditor. So we will talk about appointment of auditor. So appointment of auditor is normally, you know that, by three parties. One is by shareholders. It is the right of shareholders. Them, that they can appoint auditor. It is their right. Okay. It is the right of the shareholders of the company. Just let me know my voice is clear or there is any lag or distortion. Tell me, please. Can you hear me properly, everyone? Can you hear me clearly? All right. So we are talking about the appointment of auditor, that it is the right of the shareholders that they can appoint the auditor of the company. The second is directors. Remember, directors of the company, they appoint first auditor of company. I mean, when the company is formed, in the first year of operations of the company, auditor is appointed by directors. The secondly, auditor is appointed by the directors in any
year when shareholders do not appoint. In any year where shareholders do not appoint auditor, so who appoints then? Then directors appoint, right? Then directors appoint the auditor. Next, third. The third is then becomes the Secretary of State under abnormal circumstances. Abnormal circumstances when no one appoints, when shareholders and directors do not appoint auditor, then Secretary of State appoints the auditors. Then Secretary of State appoints the auditor. Now, next. So, students, now the point is, who decides the remuneration then? Remember, whoever appoints auditor decides the remuneration. Okay, whoever appoints the auditor, actually they decide the remuneration. This what is the fee to be paid to the auditor. Now, the second point is, so appointment of auditor is done. So the next is resignation and removal. Yes, resignation and removal of auditor. The first of all is resignation. Auditor thinks that this company I am auditing, they are not allowing me to the work properly. They're not allowing me the access to the record. These people have poor integrity, the management. That this company, yes, is doing frauds. So I cannot be their auditor. So resignation between that auditor informs in writing that I will not be your auditor now. Simply, they may give the reasons as well. Yes. The second is a removal. Now, removal is by company. Now, the removal is by company. The company removes you, yes, shareholders. So, a general meeting of shareholders may pass a resolution, may remove auditor by a resolution. Yes. They may say we resign. Yes, we cannot work. We cannot continue. Now, the next is, so we want you to remove, I'm sorry. They may say majority of the shareholder, we pass a resolution that this auditor should be removed because of any reason. But remember, shareholders, not directors. Directors cannot remove auditors. It is the shareholder who can remove. Then the third is reappoint. Yes, third is auditor does not seek re-election. Auditor does not seek re-election. You know that every year it happens, auditor give audit report, now auditor's task is completed. Now shareholders call a meeting and they may re-elect the same auditor in the same year, same auditor in the next year, or some different auditor in the next year. So it is possibility that auditors say, I'm sorry, I do not want to be re-elected next year. Okay, right? I do not want to be. Students, in any case, auditor can submit a statement of circumstances, that what are the reason that I am leaving, what are the causes I am leaving, and can ask, auditor can ask to call a general meeting of shareholders, general meeting of shareholders, that I want to leave this company and I want to speak to the shareholders, call their meeting. This is the right of the auditor. This is the right of the auditor. Now, next, the next point is, students, what are other rights and responsibilities of auditor? Rights and duties of auditor. First of all, let us talk about duties. Now, I will ask you, tell me, what do you think? What is the duty of auditor? Can you please tell me? Yes, please. What is the duty of the auditor? Yes, please. Can you tell me? Yes. Anyone? Yeah, the overriding duty of the auditor is to express audit opinion on financial statements. Yeah, to express audit opinion on financial statements. This is the overriding duty. And in order to do so, in order to express the opinion, what auditor has to do? Auditor has to check. Let me open the, yes, come here. I'll be opening in front of you rights and duties of audit, rights. Okay, here are the duties. This is your study text. Here we are. I have picked it here. Duties. So duty of the auditor is here in front of you. That he has to report on financial statements of the company. And in order to do that, what he has to verify? He has to verify whether proper accounting records have been kept. Proper accounting record have been kept or not. Means this is overriding duty. In order to perform this duty, all these have to be checked. Yes. So the first is proper accounting record. Now, what is proper accounting record? Books of entries, documents, journals, spreadsheets, reconciliations, proper accounting record. An auditor has to obtain all necessary information. What is required for audit. Auditor has to obtain that. And then, yes, director's report and financial statement. One is director's report. Directors are giving their report that this is the performance of the company. And the other is financial statements of the company. So director's report and financial statements are consistent with each other. What directors are saying and what financial statement is showing. They are basically telling the same story or something different. So this is duty of auditor to verify all these things. And yes, what are the rights? The rights, because you have to perform some duty. You must have some rights as well. So the first right is the right to access books of accounts. Right to access accounts, record, vouchers, all record of the company. Right to explanation from anyone in the company regarding financial statements. Unrestricted access. Auditor can attend any meeting of the company. Just a minute. Yes. Any meeting. Yes. So these are the rights of the auditor. Appointment I have already discussed. Removal I have already discussed. Re-election, resignation I have already discussed. Yes. Limitations of audit. The next topic is limitations of audit. So limitation. Students, listen please. Actually, such a major change it is that I have spent 7 days and still I am, reaching a conclusion because some chapters are quite, ACC have written in too much detail and things have been repeated in one chapter and then the third chapter, then the 7th chapter. There is a lot of repetition by ACCA in this study text. And although this is a wonderful study text, if you have basic knowledge of audit. So now what I am working on, that how to simplify all that. And unfortunately, it may take 3-4 more days to be able to provide. And yesterday even I spent a lot of time and on all these things I'm working on. So that's why just bear with me. Within few days, I will be able to provide you people first handout of the notes, and that notes will be wonderful. I am basically trying to summarize what is given here and repetitions. I'm trying to delete those repetitions, right? And I'm already. Let me give you a glimpse of the notes I'm working on, so that you can have idea. So here are my notes I'm working on. Okay, so here they are. You see, I'm working on these notes. So a few I have shown you in the last class. So you see, I am working on these notes. And it is not easy, I'm telling you. It is a major restructuring. Major. In the previous 10 years, I evolved and developed my notes. And all of a sudden, ACC have given a major breakthrough. And it is taking time to align my notes with that. I hope you understand and, bear with me. Right? Now. So I am talking about, yes, limitations of internal control, external audit. So what I will be doing, I'll be writing it here. Limitations. You will note down that. of audit. The first limitation of audit is, that is, students, cost benefit. That audit has a cost, right? And for unlisted companies, those companies which are not listed, for which audit is not required, they may not go for audit. They say cost is high, we have not issued share to the public. So why we should actually, go for this situation, that cost benefit, right? So the benefit, because cost is high, benefit is low. We have the first thing. For unless for those, but for those companies for which there is legal compliance, they have to conduct audit. Although the second is, audit is evidence, is sometimes subjective. There are judgments involved during the audit. When we will proceed, I will tell you at multiple stages that auditor will assume this, auditor will assume that. It is based on the judgment, right? And assumption is also based on judgment. Okay, so auditor will use his judgment at different, and judgment can be wrong. Judgment can be wrong. Okay, tell me one thing. How many of you were not present in the last class? Means today is their first class. How many? Can you please tell me? How many of you are attending first class today? 1, 2. Right. 2%. Okay. Thank you. 3, 4. Oh, okay. Right. So evidence, when auditor perform audit work, various stages, auditor say, okay, auditing is, sorry, not evidence, auditing is sometimes, yes, some stages, it is judgmental basis. Now, the next is, so then that is limitations of audit reports and IFRSs, financial reporting framework. You can write instead of it, financial reporting framework. Limitations. There are certain limitations of audit report, that there is defined format, that how report is to be issued, what will be the wording of the report. These are basically limitations. The standardized format of the report is given. You have to follow that. And if you don't follow that, so it means you cannot prepare without that. And that limitations of audit report is that it may not cover all the aspects. Even financial statements you prepare, you have studied IFRSs, accounting standards. You know what happens? That accounting standard and IFRSs, they keep changing, they keep improving. They have defined format. And every few years that is revised, that is improved. So limitations of audit is that those accounting standards may not cover all the IFRSs, may have deficiencies, may have flaws in that. Possibility is there. Now, so limitations of audit. The next is accounting report. Audit evidence is sometimes probable. It is probable. Sometimes audit evidence indicate sometimes what is probable and not certain. Yes. For example, we are doing audit at the year end. And we are trying to verify financial statement transactions and other items. And we're trying to trace everything at the year end. That where this transaction occurred in the last March or not. We try to verify from the purchase order, from the check issue, and other documents. So what we are doing, we are trying to establish something which is probable. Because all these documents can be fake, can be forged. So sometimes the information we get, we cannot be 100% certain. This is a limitation. Yes. We have to decide on the basis of probability. Now, next point. Next point. The next point is audit report. Sample-based testing. Yes, during audit, we know that auditor selects sample and check the items of financial statements. An auditor does not check all items. And sample-based testing has on risk involved. That may not cover, sample may not be representative of the population. And my opinion drawn about financial statement is based on the sample I select, the sample I test. And then is timing of audit report is an issue. You know, year end is 31st December. Year end is 31st December. An audit report comes after 3 to 4 months after year end. In 3-4 months, when auditor is performing audit and finalizing things about previous year, the next year things may have been changed a lot. So this gap, year end and the date of audit report, this gap decreases the usability, the benefits of audit, yes, report. It decreases. Any point you want me to re-explain out of these points? They're written in front of you. Any point you want me to re-explain? Tell me, please. Any point?
Yes, sir. Can you hear me?
Yes, please. Yes, accounting standard, how it is. Yes, accounting standards have, when they design that how to record item of financial statements. No, I will explain. I will explain. Use accounting standard themselves. Every few years, accounting standard is revised by the IASB, International Accounting Standard Board. That this was drawback, that's why we are improving it. Revised IFRS is there. A few days when I was studying ACCA, there was accounting standard IAS 18 revenue recognition. Now it has been replaced by IFRS 15. Why they replaced? Because earlier was not good. Later, and for how many years they were using it? It had limitation. It says this and this criteria, right? And now they say no, it was wrong. Now this is good. Okay, so this is a limitation. Got it? Is that clear, Rakshanda? Now, so next point. So the next point is, then this chapter will be wind up, chapter number 2, that is development of IAASB standards. In the last class, I told you that ISA's International Standards on Auditing, ISQC's International Standards on Quality Control. International Standards on Auditing and International Standards on Quality Control. Two names I told. They are issued by International Audit and Assurance Standard Board. They improve. They issue new standards. So what is the process? It is a 5-step process. 5-step process. The first one is, that is, task force is formed. On any issue, on any auditing issue, they think that this thing should be improved. This matter should be improved. Okay, let us form a task force to address on this audit issue so that we can bring a new auditing standard on this matter. Okay, then is research and consultation. Research and consultation. And just 1 minute, please. Now, so research and consultation. So the project task force develops that this is the proposed standard. Project task force. The task force, what is task force? Committee. Yet these 3-4 persons go and do research. This issue is related to audit report. Go research and propose us. Okay, so propose us. So research, they do research, and and then after an exposure draft is developed. Exposure draft is developed. ED, exposure draft. Right? So what draft? ED. It is also called ED, exposure draft. right? And once exposure draft is developed, then so the first stage, second, and third stage is what we are studying, by the way, how auditing standards or quality control standards are developed. You have studied accounting standards. So what is the process to develop those standards? Similarly, there are auditing standards. What is the process we are studying now? Then it is published, ED, published on IAASB's website for public comments. Basically, exposure draft tells that we are going to propose this and this new audit report in this way, for example. And once they propose, what happens is they publish it on the website of ISP and ask people that we are going to make this new change, new auditing center, comment on it, everyone. So people comments worldwide on that this change will have this benefit, this change has this drawback, this matter should be addressed in this way, the public comments. Then 4, consideration of comments and revision of ED. Once comments received, now then a meeting is called. Meeting is called at IAASB meeting. If there are some valid comments of the people, valid suggestion, they are considered. And exposure draft is revised in the light of those comments. Right? It is revised. Then approval by IAASB members. Now, this exposure draft is approved and become a new auditing standard. So 5-step process, development of IAASB standards. Now, let us proceed. Anyone, any question, please? So I'll proceed. Students, now I am moving towards auditors appointment section. But before that, I will give you an overview of audit process. Just see. One minute. My iPad is not stable. Now it seems okay. So I was talking about audit cycle or audit process. Why cycle? The cycle, we call it, the reason it is repeated every year. That's why we call it cycle. It is repeated every year. Now, let us start. Students, the first stage is acceptance of audit. That whenever a company approaches us for the audit of their financial statements, so we have to decide whether we should accept that audit or not. We should accept that audit or not. And What are the factors to be considered? We will talk about it today itself. Strict acceptance of audit or appointment of audit. Yes, appointment. Yes. Then there is audit planning stage. At the planning stage, what does auditor do? Auditor understands the entity, its controls, its system, its operations, yes, its financial matters, understanding. And during the understanding, auditor establishes that whether controls of company, controls, system, whether they seem to be working, the one case, not working. Not working. So two possibilities are there. Controls seem to be working and seem not to be working. Two possibilities are there. Now, so if controls seem to be working, there is possibility that auditor will test the control, perform test of controls. Auditor will perform test of controls. From test of control, whether actually now this it looks like control are working. So I will check whether they are actually working. Two possibilities are there. Controls are weak. Second, controls are effective. After testing, now I got to know that initial image was not correct or it was good. Two possibilities are there. Now, if controls are weak, it means things will be messed up in company financial statements. It means risk of a lot of errors and misstatements. Misstatement means incorrect record in financial statements. High risk, right? So here, low risk misstatement in financial. What does misstatement means? Incorrect recording. Something under-recorded, understated at less amount, something overstated, or something omitted. Now, the next is if controls are effective. Now, auditor control less chance of misstatement, so less detailed substantive tests on financial statements. Detail, yes, less detail. So when controls are weak, detailed substantive test. because financial statements may include a lot of misstatements. So we need to perform substantive tests are tests applied on financial statements to detect those misstatements. So detailed or less detailed. Now, so basically, what are substantive tests? Substantive tests are tests on financial statements applied by auditor to detect misstatements. Now, what are the misstatements? I told you. Misstatements. Misstatement is something not recorded properly, something omitted wrongly, something recorded at incorrect amount, something disclosed inappropriately, inappropriate format. These are all misstatements. Now, so come here again to the audit cycle. Basically, we are studying audit cycle. Now, so if control does not seem to be working, again, high risk of material misstatement. In financial statements. Yes, because control doesn't. So what to do then? Again, detailed substantive test. Same. In this case as well. Detailed substantive test on financial statements. And then, after that, review stage of audit, and then audit report is issued. Number of other small tasks are also performed. I will be, this is basically the whole audit cycle and audit process. And it is 70% your syllabus, which I have given overview of. Any confusion, any question, please? Now, so students, let us proceed further. This is the whole audit process, simplified version. Now, ideally, it should start from the acceptance of audit, and today we will be talking about acceptance. And then I will move to the controls and test of controls today itself. Now, just 1 minute, please. Now, so students, whenever a new auditor, a new client means company, which wants its financial statements to be audited. Whenever a new company, new prospective client approaches the auditor for its financial statement audited. So what does auditor do? Now, so auditor basically considers, so we are talking about appointment, accepting the appointment, audit appointment. Accepting the audit appointment. So the first thing is we perform client screening is performed. Now, what is meant by client screening? What is meant by clients? Client screening means that, yes, so should we accept this audit? Should we accept this audit? This company, what is the integrity of these directors of the company? What is the history of these directors, their market reputation? So client screening. And we say that basically due diligence is performed, which has another meaning, that know your client. Who are the owners? Who are the manager? What is the source of funds? So due diligence, client screening is performed. Yes, then. Second, we communication with present auditor. Yes, communication. Present or outgoing. What we do? We talk to the company. For example, Coca-Cola. Their outgoing auditor is KPMG. And they have present auditor EY. Sorry, proposed auditor. That you become our auditor. So EY will ask Coca-Cola two things. Number one, give us permission, we want to contact KPMG. Allow us specifically. And the second is that, first of all, allow us, we want to contact with KPMG. Second, allow, I ask you, that communication, yes. So I will say seek permission from client. It is under this one, under this point. Seek permission or written approval. Written one. To allow proposed auditor to contact outgoing auditor. Number one. Give us permission, written. Second, grant in writing permission to existing auditor to give information to proposed auditor. What does it mean? You allow us to contact them, return, and ask them to provide us information because they also need permission, your information, your permission to provide your information to us. So two things. You allow us to contact them and allow them to provide information to us. Two permissions. If client refuses, Coca-Cola say no, we will not. Refuses any one of these. If any one is refused, audit should not be accepted. Yes. So if permission is received, now we will we will write a letter. That do you know any ethical or legal matters because of which we should not accept this audit? Yes. So they will receive letter, they will respond us, and we will decide on the basis of that response and other information. Okay. So outgoing auditor, two possibilities are there. Number one is the response, the letter, what we requested information, does not respond. Possibility is also there. So if they responds the letter, well and good. This is all what we wanted. If they do not respond, so what we will do? They do not respond. We will write another letter, follow-up letter. Letter is a return. Still they do not respond. Talk to directors of company. Tell them what is the issue. And if still there is not resolved, then report the outgoing auditor's conduct to professional body. I requested you information, you were allowed to provide, there was nothing wrong, but I followed up, but you did not respond. So this is unprofessional behavior. So I will report you to the ACCA or ICAW, whoever it is. So come back. Is that clear to everyone so far? Tell me. Is that clear? Right. Now, So, students, so we are talking about know your client and communication with the present auditor. Now, so these are, if I talk about, I give a subheading. Acceptance of auditing is the main heading. The one subheading is client-related issues. We want to get information about client, their integrity, their operations, their conduct, their reputation. The second is practitioner related issues. Practitioner, I mean auditor related issues. Auditor related. So what auditor will do? Now, we are satisfied with them, but what about us? Do we have resources to audit this company? What is meant by resources? Available for audit? Now, resources means number of team members, skill, competence, experience of the relevant industry, that type of company. Do we have resources? If we don't have, how can we audit? If we don't have enough team members, how can we audit? So resources. Second, engagement. Yes, sorry, second. We are engagement economics. Yes. What do they engagement economics? We are accepting this audit. We're accepting this audit. Is there any profit expected of this audit? Because audit has a cost. We have to pay to all the teams. So cost benefit analysis of engagement. Cost benefit analysis of the engagement. And the third is that need to be considered before accepting audit. Ethical issues. Ethics, any threat to independence. Any threat to independence of auditor, ethical threats that has to be considered. Can they be reduced or removed if there are any? So these are the points basically which are considered now. So then things are decided. Okay, now we are happy that we can accept this audit. And now, but there are certain preconditions for audit. Preconditions for audit. What are the preconditions for audit? What are the preconditions? It is just like that. I am happy that, okay, I decided to give you the lecture. Well, what are the preconditions? Good internet, iPad, laptop. If they're not present, light, if they're not present, can I deliver? No, I cannot. I have to be prepared for that. So similarly, there's preconditions for audit. So we are, okay, so two things are to be preconditions. If any one of these is missing, any one of these, auditor cannot do audit. First of all, financial reporting framework. Used by auditor is acceptable, financial reporting framework used by auditor is acceptable. Sorry, what happened to me? By client to produce financial statements. Yes. As per law, which financial reporting framework they are using, that is acceptable by law. If that is against law, I cannot audit. Second, one precondition, second precondition. Obtain management's agreement that number one, sorry, it is their responsibility to prepare financial statements as per relevant financial reporting framework. Yes. It is a responsibility that they will prepare financial statements. They accept that. They will implement controls to keep financial statements free from material misstatements. It is the management responsibility that they will do this. They will ensure it. Now, they will implement controls. And the third point, they give, yes, they give a written acknowledgement of three things. The third thing is they will provide unrestricted access to all record. Yes. And staff to auditor. Yes. They provide that auditor can access anything, talk to anyone for audit purposes, for financial statement audit. They will provide access. So these three things in writing, they give auditor. If any one of these is not present, auditor cannot proceed with the audit of the financial statements. Remember that. Okay? Yes, it will happen. Now, just I will take a 5 minutes break, then I'll be back. Okay, just 5 minutes break. Now, students, next. So preconditions for audit we have covered. Next. Just one preconditions auditor think that they are met. So then auditor talk to the management. Now terms and conditions of audit are discussed. We talk to them. Terms and conditions like that. What are my responsibilities? What are your responsibilities? And so on. So terms and conditions are discussed. Remember, an engagement letter is prepared. So we are going to talk about engagement letter. Students, I am auditor. I am auditing 20 companies this year, my firm. I can use the same engagement letter everywhere. The answer can be yes, can be no. Why yes? It benefits. It saves time. I have prepared a thorough engagement letter and so it covers all the aspects, but engagement letter, even a standard engagement letter is used. It should be tailored to include client specific matters. Yes. Client specific matter that this client we are going to audit and all the matter should be included for it. Now, next. So the next is what is the content of the engagement letter? So there is some mandatory or principal content. Yes, mandatory or principal content. Which must be included in a engagement letter. Number one, objectives and scope of audit as per law, ISAs, any ethical code. Sorry, just a minute. We're doing some malfunction. Any ethical codes? Yes. So the first thing in the engagement letter presented that this is the audit objectives as per law. What law says? What international standards on auditing say? What codes of ethics say? These are the objectives and scope of audit. Now, next, second. Now, the second point is responsibilities of auditor. What are the responsibilities of auditor? Yes. What auditor will do? How they will plan and perform audit? Management responsibilities. There will be explained related to financial statements, related to controls. Yes. Fourth, identification of relevant financial reporting framework. Financial reporting framework. Financial reporting. What is the financial reporting framework applicable over IFRS, for example? So the fifth, any report yes, or communications to be given means what auditor will give, what type of reports, what is the source. Now, next, six, students, auditor will report key audit matters. You know what are key audit matters? Important matters encountered during audit. I have audited this company. In my opinion, these 4, 5, 6 matters are very important matters for this company. To report key audit matters encountered during audit. Now, so this is principal or mandatory content which 6 items. Any point you want me to re-explain? Tell me. Is it clear? Okay, good. Now, students, the point is, in addition to these matters, any matter, for example, fee-related matters, then what is the fee? What will be the basis? When it to be paid? How it to be paid? In addition to these matters, any matter which is important that can be included, which auditor think, which management think, because engagement letter is basically a contract between company and the auditor. Can note on this one. It is a contract between company and the auditor. Yes. And on the behalf of company, some management people sign that. So to clarify responsibility, to clarify the engagement, so principal contact is here in front of few people. Now, next point. So that can be included. Any matter. Okay. Now, to avoid confusion. For example, we can write more example. During audit, I have to rely on the work of an expert because company is dealing in mines, antiques. So I don't have knowledge of the valuation of that. So how will I verify? I will rely on experts. So I will mention in the engagement letter that I will be using expert. I will be using internal audit. Right? So, or means, or if any local requirement, legal requirement, sometimes local law says, depending upon country to country, the auditor will report to the authorities as well. So if there are, the auditor will mention that in the engagement letter. And there is wonderful example of engagement letter is given in your notes here. They have given 3.5, 5.3.3. Okay. 5.3.3. Just a minute. Yes, here is the engagement. A sample is given. You see, I do not know how to write on it. I have gadgets, but I do not know how to use them. Okay, here is an option of, okay, select option. Okay, right. So addressee, engagement letter, they say this need to be varied according to the circumstances and the situations. Address to ID of the statement. What is the identity of the financial statements that you have requested that we audit financial statements for this year, etc. So this engagement letter. Objectives. We will give reasonable assurance. As per IS says, you see here, we conduct our audit. We follow IS says for now detail of audit. This is auditor's responsibility, basically. Detail of our audit is auditor limitations. So what auditor does? So now management responsibility. Any fee-related matter, sign. So this is a wonderful example. So I have shown you. You need not to, of course, reproduce in given letter exam, but you should know that it is how it looks like. Now, So engagement letter, students. Yes, we audited 1 year. Come to the notes here. For recurring audits, recurring means we audited this last year. Now they want us to continue in the next year. So the point is, so do we need to submit another engagement letter? Now, so students, they say audit 2024 as well. You have audited 2023 or 2024. So what auditor will see, auditor say, okay, I submitted last year engagement letter. Do I need to change that? Student, last year submitted engagement letter will serve the purpose. Means you need not to submit a new engagement letter every year. You need not to. Same engagement letter will serve the purpose, but there are certain circumstances. However, in certain circumstances, it need to be revised. If there is, number one, a change in law, a change in financial reporting framework. A change in auditor's responsibilities. They say now you have to perform this work as well. Another additional one. Clients, company, we are auditing. Business has changed. It has too much grown. So we need more work increased. Business nature changed. Now, next. Students, listen. If senior management of company is changed, because they do not know what auditor is, means they have to enter into an agreement without, because previous management signed engagement letter. A significant change in ownership of company. If there is significant change in ownership of company, then engagement letter has to be revised. Engagement letter has to be revised. So they, yeah, because shareholders appoint auditor, now shareholders changed. The engagement letter has to be revised. Now, so these are the circumstances when engagement letter has to be revised. Now, these can be tested in any section of your paper. Yes. Now, so students, I'll proceed further towards the next point. Students, we learned one thing, that auditor's role is, if anyone asks you, what is the responsibility of auditor? What is the role of auditor? If anyone asks you, so then tell me what that is. One student told me a few minutes ago, the role of auditor is to report on financial statements of the company. Okay, one student told me. So I'll proceed and talk about financial statements, assertion, what they are. How many of you have heard about this word before, assertion? How many of you know? Tell me. Do you know about it? Right. Some people, majority people do not know. Okay, a few know, but majority do not. So we need to know these words first. A few terminology I will explain today, because that terminology is very much important. That will be used in upcoming classes. I call that lingo of audit or language of audit, basic language. So that's why this you must have, I mean, just like that, these are alphabets of audit, very important. So what financial statement assertions are? Financial statement assertions are basically, they are basically objectives of financial statements to be achieved while preparing financial statements. Financial statement objectives. Yes. Now, students, you want to go to your office, okay? You want to go to your office and you are preparing for that. You have to dress up. So your dress up, actually there is some objective in your mind while you are choosing your dress, your appearance. Okay, So there is some objective. So when company is preparing financial statements, there are some objectives to be achieved. For example, the objective is that financial statements are accurately recorded, accuracy of transactions, accuracy. Accuracy of transactions. Items are recorded at transactions are recorded at correct amount. Right? Second, cutoff. Cutoff means transactions are recorded in the correct accounting period. You can note down these points. Correct accounting period. Now, means this year transaction should be recorded in this year, not in the next year, or vice versa. Then transactions are valid transactions, authorized transactions, right? Authorized. Basically, these are we are talking about objectives of financial statements when they're being prepared. Proper, appropriate classification. Means proper account, relevant account. Yes. And then, students, the next is recorded assets actually exist. E. So A, C, V, again A, and E. Cave. A is two times. So at this stage, we say that these are the objectives of financial statements. Items. Now, that whatever you are recording, that is accurate. You mean company. And who has to receive? Who has to achieve this objective? It is management of company. It is their target, their duty to achieve the objectives. It is their duty. That whatever is happening, they have to achieve. Now, so students, then the company has practical steps in place, steps, procedures to achieve the objectives. They are called, so which are called as internal controls. or control procedures. One thing I missed here, accuracy, valid, and complete as well. Sorry. Complete, another C you can add. Complete as well. Information. Give. So internal controls or internal procedure. Okay, leave financial statements for that for now. The example I normally give. The example I normally give is that is if there is winter, in the winter, you are wearing a jacket. Right? What is the purpose of wearing the jacket? Two things. Tell me. Tell me. One is wearing the jacket. Jacket or sweater. Wearing a jacket or sweater. What is the objective? Tell me. What is the objective, students? Tell me, please. Why you wear jacket or sweater? Tell me, please. Exactly. To protect ourselves from cold. This is what I wanted to hear from you. What I am teaching today, it will be the base for next 2 to 3 lectures. That's why listen carefully. Listen carefully. Mr. A is wearing a jacket. Mr. B is wearing a long coat. Mr. C is wearing a sweater. Right? 1, 2, 3. Now, what is the target of all 3 persons? This is objective. So objective is the most important thing. They want to achieve. All 3 have adopted different ways. Right? And if it is working for them, it is well and good. It is well and good for all of them. So we cannot say Mr. A is wrong, Mr. C is wrong, Mr. B is wrong. We cannot say. Because protecting oneself from cold is the ultimate target. If that is being achieved, that's fine. Now, so these are different controls or control procedures being used by them to achieve this target. These are the different procedures. Right? Now, so protecting myself from cold was the ultimate target. And if that is being achieved through anyone, and now why I'm repeating again and again for clarity. Now listen, I'm going to link. In a company, they say we want to ensure our staff is paid for work done only. Company X. So company X basically what they do, they mark attendance by thumb scan. Company Y is using an activity log on computer system. They see when the staff is logging and when the log out and what the work they have done. Company Z is using a card swipe method. A card swipe method.
Oh, wait, yeah.
What is that?
Yes. Okay.
That staff come, they swipe their card, and there is, and being monitored by HR person or security guard. So if your target is being achieved, that's well and good. Any method is good. The three different controls. Well and good. So these are, what is the purpose? This is objective. These are the controls. So we have come to a conclusion that specific controls may be different from company to company, organization to organization, while objectives may be the same. Okay. Anyone, any confusion? So I'll proceed further. So we have learned a relationship between objective and control or control procedure. Objective is something to be achieved. It is the practical steps implemented to achieve objective.
Oi.
Practical steps to achieve objective. So students, assertions are objectives. Okay. So company implement practical steps to achieve those objectives. That there should be authorized transactions, daily record should be updated, reconciliation should be paid, approval of the manager before transaction. You know, these are what they are. They are practical step in place to achieve those objectives. Okay, now. So we are going to talk about auditor and internal controls of company. Auditor and internal controls of company. Now, come back to that audit process diagram. Here it is. This is the audit process or audit cycle. Now, just go through it and tell me one reason with one sentence or two sentences that, you know, auditor's role is to report on financial statement of company. The question is, then why auditor test the controls? Why auditor test the controls of company? This is a question. That why auditor test the controls? Yes. My question from you. When auditor's role is to report on financial statements of that company, then why auditor is testing the control? Just go and check financial statements. Tell me. Okay, one answer received. More answers, please. What do you think? More answers, please. No, Silas is not the good. I want contribution from you guys. This is not good. Students, thought process should work. This is not good. You must have in your mind something which you are not sharing. Anyways, I will explain. You see here, a good answer, right? So, auditor is testing the control for one purpose. Okay, right. Now let me explain. Remember, auditor tests the controls to assess the amount of work required to be performed on financial statements. We said if controls are weak, detailed substantive tasks. Controls are strong, less detailed. This is the purpose. So basically, that how much misstatements are likely there, so that we can decide how much work it need to perform. This is the purpose. Next, to note down this point. This is the purpose of testing the controls. Next. Second point. So what are the steps involved? Because the purpose is to report on financial statements. Number one, auditor comes to the company. Auditor understands the, so step one, controls of company. Second, document the controls. And the third, perform walk-through test. And the fourth is perform test of controls. Perform test of controls. 4-step process. Auditor and internal controls of the company. Now, next, 4-step process, and this process we have to study again and again. Now, I'm not starting it today because we don't have time for that. We will start in the next class. But listen, please. Listen, please. Something additional I'm going to discuss with you. Students, at planning stage of audit, once again, audit cycle, something additional I'm going to tell you. Auditor has to decide whether to go for test of control plus substantive or detailed substantive. So this is basically approach, 2 approaches to audit. These are approaches for audit. Approaches for 2 approaches for audit. Test of control plus substantive or substantive. And how to choose? I have already explained. Initially assess, come back to the audit cycle. Yes. Yes. So planning stage, they have to choose the approach. They assess the controls. Controls seem to be working, so go for test of control plus substantive approach. Otherwise, only detailed substantive tests. So controls are tests because you have decided that controls are not working. So go for detailed substantive. Detailed audit to work on financial statements. Here, again, test the control. If they are effective, less detailed and detailed. So you see, in the sentence, I'm repeating again. So auditor performs test of control to determine the level of work to be performed on financial statement, or level of substantive test to perform on financial statements. Now, students, let us proceed. There is a term student, there is a term that is called professional skepticism. I will give you a bit introduction today, not in detail, because these terms have to be used. Have I discussed it in the last class or not? Tell me. Did I discuss it in the last class or not? Tell me. I'm just confused. Okay, right. And professional judgment. What about? I have discussed that as well. Professional judgment. I can explain for that. I think I have not. Yes. Professional judgment. What is that? The students, auditor, during the audit process, auditor has to make decisions utilizing knowledge, experience, and according to the situation, they have to make decisions. And this process is called professional judgment. Because decision is not straightforward 2 plus 2 is equal to 4. No, it is not like that. For example, this client is high risk or low risk. I have to see certain factors. So what should be the materiality level? I have to certain factors and decide this should be the materiality level. Okay. So judgment is basically utilizing experience and knowledge and making the decision as per the situation. This is called professional judgment. This is called professional judgment. Now, applying fingerprint. So materiality decision is done by judgment. Whether the audit evidence is sufficient, what evidence I have obtained by audit, that is sufficient, again judgment is applied. And there are many other points I will explain when the time will come, but just introduction I am giving right now. Judgment. Now next, so students, I think that's enough for today. Whatever we have covered today and in the last class, in the next class I will be utilizing all these wording. So please, assertions. I have given introduction, not explained everything about assertion. Introduction, I'm just giving. So, inshallah, you will have notes as well. And actually, what I am working on, that note should be sufficient for you. Yes, if you want to read a book, you can go for that. So I don't want you to actually do double-minded, that I have to read notes and book both. No. So yes, this is my first try. For some chapter, I can say, okay, refer to that book. So this is what I'm working on to make things easy for you people. Okay, so just pray for me because I am working hard for that. Anyways, see you in the next class on next Saturday, right at 8 o'clock. And I'm sure you will be having your first handout by this Tuesday via email. Okay, you will be having your first handout of notes. God bless you. Take care. Goodbye.